One current liability that we're going to see and that every company is going to have to deal with is payroll. In our introductory accounting classes, all we worry about with payroll is just salaries expense and salaries payable at year ends. But that ignores all of the taxes that the companies have to withhold from the employees and that the companies themselves owe. So we're going to look at several different types of taxes. And some of these taxes are going to be simply because the company as an employer has to pay taxes to the government. And we're going to call these taxes part of payroll tax expense. So again, the government says simply because you're an employer, you have to pay some taxes. And then, as we all know, if you've worked a job on the books, that the employee owes quite a bit of taxes out of their payroll. But it's the company's job to deduct those taxes from the employee's paycheck and then remit them or pay them to the government. So these are going to be part of salaries expense. So we're going to see every time a company does payroll, it's going to prepare 2 journal entries. Okay, the payroll tax expense, this is going to be what the company owes. And then the taxes that are withheld as part of salaries expense are what the employee owes, but we care about it from the companies doing the company's journal entries because we withhold them and then make payment on behalf of the company. The first tax that I'm going to discuss is federal income taxes that are withheld from the employee's pay. We're all familiar with that. You know, when you get your paycheck, it's quite a bit different from that agreed upon rate from your job interview. This specific account title we're going to use is called withholding taxes payable. But it relates to the federal income taxes that are withheld by the company on behalf of the employee. Okay, so this is not a tax that's paid by the company. This is part of salaries expense, is what the employee owes, but the company withholds. The next tax is Social Security taxes. This is what the government says needs to be paid eventually by the company and by the employee. And this is what is going to fund retirement and disability that the government pays to people who qualify. So the company does have to pay Social Security taxes and employees have to pay Social Security taxes. So just part of being an employer, you have to fund this. And then every person who works on the books is going to have to fund this. It's the company's job to withhold from that employee's paycheck and then remit to the government. Similar to Social Security taxes, Medicare. This is going to fund health insurance for people over 65 and disability. And just like Social Security taxes, this is also the company is responsible for it and the employee is also responsible for it. 2 more taxes we need to worry about. One is federal unemployment taxes. So you've heard that, people that are unemployed can file to collect unemployment. And that money comes from somewhere. It comes from companies who are employers. Sometimes you'll see this on your paycheck as FUTA. This is what it is. Although actually you shouldn't see this on your paycheck because employees do not fund this. It's actually just part of the company's. If you are a company who hires employees, then you have to contribute into the federal income taxes, federal unemployment taxes, and then also a separate state unemployment tax fund. And sometimes you'll see this as SUTA. Okay, so employers have to pay this, but we, the employees, don't have to worry about this. And now let's start looking at example 1.